Okay, everyone, welcome to the August 2023 Talga Group Investor Webinar. Today, we'll hear a presentation from Talga's Managing Director, Mark Thompson, about the group's recent updates. Following Mark's presentation, there will be a Q&A. Thank you to everyone who submitted a question ahead of time. You can also submit a question during the presentation through the Q&A function on Zoom. We've received quite a few questions, so if we don't get to your question, feel free to get in contact with us after the webinar at info@talgagroup.com. I now welcome Mark Thompson, Managing Director of Talga Group. Mark, over to you.
Thank you, Alex. Hello, everyone. Lots of questions have come in for this webinar, so I may answer some as usual, going through a few slides, a very short summary presentation to frame what is. We're trying to do these obviously quarterly. This one's a bit late. Obviously, we were trying to wait for getting some further information and some more meat on the bones post the quarter. But anyway, we are here today, and we'll see what we can say. But importantly, we'll continue trying to answer questions that build up in ways we can separately and interact with you as much as we are allowed within the boundaries of our ASX listing and all the various rules and compliance and so forth. So just a reminder that we're not actually a raw material company. We make the actual products that get sold directly to cell makers, whoever they are, in batteries, and we have a range of products. So we are vertically integrated, which means we have our own sources of carbon, our own sources of supply, but ultimately we're all about interacting directly with the customers, and that means we have a lot of intellectual property. We have full ownership of everything we do, from the process technology, purification technology, the products themselves, meaning the types of anode material. We have fast charge products, we have silicon products, we have solid state products, we have a whole range of things suiting what's happening in the market now and also where the market's going. And we have a fantastic range of scientists and staff, engineers, people in the environmental side, permitting sides, geology side, obviously, as you would have seen with lithium lately. So the company's has a huge amount of real equity in the business sectors that we operate in. And we're very proud of what we've achieved. And ultimately, we're united in that our products and the way we make those products are aligned with modern demands for battery materials for cars, that you're part of a transition into a cleaner, less polluting world, but also therefore the supply of those materials should be cleaner as well. And that's a huge driver for us. And I know that a lot of shareholders share that same feeling about its combination of fantastic commerciality and the economics, but it's also combined with, it's clearly a better way to go. So it's a fantastic union of the both. Where are we at now? 450 mil market cap, actually probably one of in the top two now, largest valued graphite related companies in the Western listed markets. 360 million shares after being listed for 13 years. We just had our 13th year anniversary since listing in July. Staff options just under $40 million end of last quarter. Management obviously has skin in the game. You'll see very little shift in our top 20. Not that you can see all of that, I guess, in the upcoming annual report, you can see all that. But yeah, there's certainly, since we've gotten into the ASX 300, there's been more, I'd say retail, or the volumes have not changed that much, but you'll also see that it's not primarily our largest shareholders. They have participated in any capital raisings, and they continue to be very supportive of what we're doing. Currently, the share price obviously is where it is, based on people selling more than they're buying, and that's been the malaise in the general market across everything that I can see: nickel, lithium, copper, you name it. The macro has been quite bad this year, I would say, nearly as bad as last year. But we have actually, for what it's worth, we've actually been, compared to our peer group, I guess, we've actually done pretty well. But of course, we want to do better, and we are working on everything to make that happen. Operations haven't changed. It continues to be very useful for us to, it turns out that the ASX is still obviously a good jurisdiction to be listed on compared to Canada or London or somewhere else, although we do look at other jurisdictions sometimes depending on our scale and our requirements. Just to point out, we still have good relations and people in Japan and also in Hong Kong with good access to China, which is continuing to be a big part of the industry. But mostly in Europe, in Germany, our German facility is still going really, really strongly. Now still doing graphene type work and production actually, but mostly silicon pilot scale-up work. And Cambridge, fantastic expanded battery centre of excellence there. Office in Stockholm now, continuing to grow to essentially have a continued shift in growth as we continue to shift resources to Sweden and to Europe. At the same time, everything grows bigger. So Perth actually isn't shrinking. Actually, the whole business continues to grow as it needs to be a supplier to automotive companies and cell makers for EVs. And up at Kiruna and Luleå, we have our main offices for interacting with stakeholders and, of course, the operations themselves. What's happening in the landscape in Europe? Well, in a word, growth. New startups coming on. A couple of startups have actually fallen away, but they weren't ones that we were engaged with for various reasons. But yeah, the big growth, the big numbers are continuing to pile on there. You're taking an industry that produces nothing in Europe has to produce millions of tons of materials. If you want to provide batteries in the continent, currently you import nearly all of the materials. So this obviously has to change. The leaders of the corporations that are making the batteries and making the cars want supplies within the continent to be where the batteries are being made. So while in the early days, you still need this continued imports, there is a big pressure to generate things locally. And so Talga's operations being in Sweden have direct road and rail access to all of our customers throughout Europe, except for obviously anything happening in the UK, which will need a ship involved predominantly, unless you want to put some stock on the rail through the channel. But mostly it's a road and rail business down into Europe is the main thing. Continued new battery cell makers and EV production expanding around the continent. So we're in the middle of that. So why be involved in anodes at all? You could say, well, one of the biggest things is that people's EVs have got batteries which are made of about half of the battery is graphite anode. And there's about roughly 70 kilos, depending on the size of the car, per electric vehicle. And electric vehicle growth is like that, which means that graphite for anode, it doesn't mean industrial graphite, but graphite for as anode is also undergoing the same growth rate. So in the early days, you've got some flexibility, as you can see in this forecast deficit at the top right. You've got some potential for supply to come from other areas of the industrial market. You've got potential for overcapacity and things like synthetic, but eventually they will get sucked up by this 40% type growth that's happening in EVs. And this isn't projected, this is happening now. So in several years' time, you go into deficit where that just can't all keep up. And there certainly hasn't been any new mines for natural being able to bring on for the natural side of the anode. And in the synthetic side, you're at a time right now where steel consumption's dropped a little bit. China's a bit recessionary. So you've had a lot of synthetic graphite that would normally go off to the electrode market has been available for the battery market. And that is a short-term thing. So everyone's forecasting deficits, high prices. And as you can see by the numbers here in point number 2, is that EVs, when they reach 30% of global car sales, then the graphite basically is doubling. You know, the entire global supply of graphite must double in that time. I don't know if this bar is in the way that I've got on my screen. I'm not sure if I'm too scared to try and move it though. Anyway, I'll leave that alone in case I stuff that up. Localization is a big issue. People want things where they make things, and sustainability is growing. For example, natural graphite, like Talga makes, can save 21 tons of CO2 per ton of anode made. So that's massive. And actually, when you look at a lot of battery materials, the way they're currently made, they're incredibly dirty. A lot of numbers we have on synthetic is that they can be 2 to 3 times worse than what we're actually reporting in our LCAs. And you've also got other materials. When you look at the CO2 per ton of material, it's up to 10 times worse than this. So in general, there's a big push to try and clean all that up. And performance is a big thing. Recently, people might have heard about CATL's new product that they're selling into Tesla, and while not being able to say anything for commercial reasons or too much detail, you can surmise by looking at publicly available research reports and things that the trend is towards using a variety of sizes that include ultra small natural particles to actually increase the charging kinetics. And when you have a faster charging battery, you can afford to have less battery if it's getting charged more often. So you can have different ranges for different performance things. And that's, I don't want to get too techno on you here, as I'm always wanted to do, but that's, it's also, you live at a time when lithium-ion batteries are about 40 years old, but in that 40 years, there wasn't this pressure on them to be better because they weren't in cars, they were in little devices and they were okay. And so while there's been some general progression and excellent gains in energy density and performance in different ways, you're only recently seeing the interface of the marketing push for solving things like range anxiety meet the technical side. And it takes years and years and years for that to be designed, optimized, and make it to production. And so a lot of the stuff you're reading about in the media is all hype. It's all too far away and usually doesn't work commercially. The things you're seeing in research are starting to come into commerciality now, but what you're seeing now is companies managing to blend those together and bring them to market. It's a new world for anode and for graphite. Previously, it was just sort of an accident. It was a dinosaur industry. It was just grabbed from anywhere, and they just worked it out almost by accident. Now it's getting highly refined, highly engineered, super tech, lots of money, working on new products. And because it helps with the marketing of the final product, which is a car or a bus or a truck, or depending on who's the buyer. But certainly the bulk of the volume is for passenger EVs at the moment. And that is driving demand for particles and graphite types that were not the norm in the past. So you can't keep looking at publications that are relying on data from even 5 years ago to 10 years ago that they're just not necessarily relevant about what's happening in the next 5 to 10 years. So what you're seeing, well, that hasn't changed, is down the bottom right of this graph, where you've got massive amounts of anodes in particular are the most exposed, nearly 100% Chinese related production at the moment. Anyway, I'll try and get into that in question time. Okay, so the refinery, we now own the first fully permitted shovel-ready refinery site in Europe of any commercial scale. So the just under 20,000 tonnes per annum refinery is now fully permitted. We're actually doing a groundbreaking ceremony in a few weeks with invited guests. Up at the mine, obviously the environment and the Natura 2000 and the other related permits have actually been granted by the courts. And now there's a statutory appeals process that we're going through, and those appeals are being assessed, and I'll no doubt have to talk to that in question time. But the point is that compared to a year ago, you guys want to say, well, hold on, they've got to get the mining permits. Well, actually, we got them. There's now an appeals process, but the actual multi-year court process of going through, applying for and getting an environmental permit, that's actually been achieved. Doing the same thing at the refinery site, which involves a purification, wastewater. You've got chemicals. You've obviously got natural effects on the landscape and stakeholders. That's actually all been done, and that's fully permitted now. And there were no appeals, so we can actually start construction on that area, which we are doing, as just mentioned. So those two things have been massive over the last. That's compared to a year ago. If we want to look at the financial year, that was something that everyone was really screaming about. The other thing was financing for the project. So we've been very open about securing up to roughly about 60% of the project capital was being targeted with debt. And for that, the EIB has approved 150 million euros as a sort of tranche A, and the balance that we need is getting supported by independent and leading commercial banks and export credit agencies. And the composition of that group is being finalised, but I'm very glad to say that at this point in time, the credit appetite from our proposed financiers exceeds our target debt requirements. As far as I know, this would be the world's first graphite project that's getting done with commercial debt, not con notes and pure equity, as has been done in the past. So that's significant. The EIB is a top tier. They're not just like a banking institution within Europe. They also seem to have the highest standards of everything from ESG to the market. The financing side is independent reports required. If you get over the line with EIB as we have done to the point we have, that's a big tick from everyone in the rest of the community and financial community, and to get commercial debt as well available for this commodity. I'll call it a commodity here instead of product, but it's not a commodity they know about. They've been in copper, zinc, gold projects forever, oil and gas, whatever. Now they're shifting towards they don't want to do fossil fuels, obviously, but it isn't just a raw material story either, like say a lithium project making a concentrate. So they've had a lot to learn. They've had a lot to get up the curve on. It's pioneering, to be honest, this sort of project in a global sense for them to finance, and the fact that they've actually got to this point, and soon we hope to, we'll get to the point where we finalize all the term sheets. That's massive. It's a huge tick, and compared to, I guess, the noise in the stock market, that has been a very solid progression that we know influences people around the globe interested in our ability to deliver the project and ability to be a supplier to them going forward. The balance we'll talk about, no doubt, in question time as well, on what we can do on the equity side to do that in the best way possible. We've been operating the EVA plant now, which is making anode for our customers at the moment for about just coming up to a year and a half now. That's very significant. If you look at de-risking your potential production pathways, then having a plant that is currently operating and producing anode from your own material and going and using your own processes and going out to customers and getting qualified. And that process is underway, obviously, with the off-takers you know about, but also quite a very large range of people you don't know about who are also going through the same process of off-take discussions. So we get a lot of insight into operations from that, and it de-risks what would be the commercial plant getting built. So it's a very, very significant asset. It was a significant investment, but it is paying off in that our advancement from here to the commercial plant it gets de-risked and it gets smoother, and we know what we're doing. So it's not just a hope for pie in the sky thing. It's an executable pathway, which is very, very challenging. And it's a big barrier to entry actually to anyone, is to commission and run successfully a plant and produce material like they produced in a lab or with a metallurgical consultant, but to actually do it yourself without using outside parties and deliver that to customers, and for them to like it and then want to sign up deals on that basis at an automotive supply quality level, not just a raw material level. That's significant. Importantly, we republished our LCA. That was because that almost all the reports and work we've done over the last few years, going back for the DFS, had to be almost entirely copied for the banks as independent reports. Very, very extensive, detailed programs. And we have reiterated the LCA using Minvaro this time after ABB and Hitachi did the previous one. So this was updated to allow for the most detailed engineering on the feed studies, and the high-grade ore, our process technology, and the clean power grid continues to be a world leader in how low the emissions can be of making anode. Now, importantly, this is all of our production in this. So all the anode production is in this number. It's not the part we use for anodes and there's other parts we use for industrial projects. So we take some of those emissions out. There's really no chicanery in that. This is all of our anode production has these numbers. And this is becoming more important into Europe in particular, and customers that need to start showing their carbon emissions to the public. They need to start labeling their emissions, almost like this sort of 5-star system you see on white goods and things like that. Energy labeling. You have battery labeling starting up over the next few years. The land acquisitions have been quite important. We've strategically moved to purchase the refinery land and also key parts of land up at the Vittangi project itself. This is a sign, obviously, of our confidence about the project going ahead. It's also important when you look at all the various things that we have to do to start construction and stay on our critical path timelines as soon as and do things as soon as we want to. So at the top here, you can see where the land is that's now been cleared, and that's where we're soon going to put a shovel in the ground at the refinery. And below you can see our trial mine site, which has now all been fully rehabilitated. But yeah, it's quite good that we've been able to secure sites that have also secured things like, in some cases, forestry rights, water rights, mineral rights, hunting rights, things like that. So there's been a combination of rights that come along with some of the land and some not. It depends. But more importantly, it's about making a smoother pathway for development. On the execution side, we've continued to grow the staff there, getting ready to build the project. The feed studies completed on the refinery, now going upstream to the mine. As we talked about, that our in-house battery and labs at the actual EVA plant and also coming up. There's extensive labs being built there. This is all quality control work and development work at the same time. So huge amount of detailed work going on behind the scenes, from everything from the products, from who's calibrating the scales and who are they licensed by. This is automotive product supply chain material. So it's at a very high level. Some of our customers come up and audit all of this as part of a continued review of what we're doing, and when and how as part of getting engaged. It's much more advanced than just having like a spec that just gets bought in the hope that in future it does what it's going to say. The market's really interesting. Obviously, right now you've got, in the raw material markets, you've got some super low prices, 10-year low prices, and you'd say, well, how come? Well, the raw materials at the moment have been oversupplied into a market that on the industrial side can't suck it all up. On the automotive side, on the battery side, prices have actually been pretty stable up at anode levels. They've come off a little bit with oversupply and synthetic out of China, but overall they are continuing to stay stable for premium natural as anode. We're not talking about raw materials here. And what's happening is that you're getting a crossover now where the bulk of natural material for the first time is being used for batteries and not for industrial purposes. Now, that's small particles. It's not historically the big particles that were more valuable. What is more useful for batteries are smaller particles, and the smaller they are, sometimes the better they can be, depending on your exact specifications you're working with. So there's this big structural shift in the market where happening, and it's around that time when everything is new again, where everything you think you know from past documentation or things you read online are not necessarily reflective of what's happening. So you're seeing this big structural shift, and where natural will be, most of the natural will be consumed for batteries rather than industrial purposes going forward. And synthetic is getting shaken up too between the steel markets and their industrial uses and batteries as well. And each of them have got quite different requirements, and there's different pricing things shaking out of all that. So right now you're sort of heading into this crossover time, but overall the growth is undeniable because it's based on EV sales. EVs are sucking up the batteries are then sucking up graphite made into anodes for batteries. It's not changing the industrial market, and that's why you can see this split between low price industrial products like concentrate prices or even SPG, because all the value or all the profits are captured in the downstream coating and the production of an actual battery product as compared to a raw product. So when you're at that stage, it's different deal. Over in the EU, there's also things changing over there. Obviously, everyone, including us, are massively frustrated by permitting timeframes and the legal processes of Sweden. Having said that, at least we still own 100% of the project. We haven't lost 10, 20, 30% of equity in the project overnight, as happens in other continents. And importantly, once you're up and running, I'm sure this will be an extremely long-term and stable place to operate. And of course, the deposit just happens to be there, and it's a fantastic source for using for making battery anode. We've been very heavily engaged, and we're very well aware of details that will continue to make things better for us. We're seen as pretty leading light in anodes, I would say, in Europe. We're normally talked about as being the biggest and shiniest and probably only real scalable way to make significant amounts of anode within Europe in a way that the customers themselves can use. So yeah, it's going pretty well. For example, the battery passport legislation coming in, the labelling legislation coming in, the potential sovereign wealth funds getting set up. there's a whole heap of different things. Even at a local level, you've got the separation of Natura 2000 from the Mining Act, mining concession process and things like that. They're all proposed, and or the legislation's actually been underway. So there's a lot of positive things there. Bright future for us, continuing to be arising from being vertically integrated, being under basically mostly our own control. The resource underpins a lot of things. Here's a picture of one of our many sheds of stockpiled material that we've dug from the trial mine, which is being used to feed various things. We've actually still got about 25,000 tonnes of this material, because we also had some material from previous trial mines left over as well. So we've actually still got enough to make about 5,000 to 6,000 tonnes of anode in the first case here. The possibility to expand the project obviously is very high. We've previously published some plans on that, and now we've also mentioned about the lithium and recycling and other aspects to our business that will enable growth, diversify the company, de-risk some things in the future. So right now we're focusing on Non-Savara South, the Niska expansion. We continue to look into ways about how that can be not just executed in future, but I mean, obviously we want to be careful about how we implement it and use the lessons we learned from the existing Non-Savara South development, but also look at can we integrate that more into our Non-Savara South development as well to make things faster or cheaper. So watch this space is all I can say there. But importantly, that the project you're looking at is this tiny fragment. So you're looking at this $1 billion NPV project that can make excellent returns from just a small fraction of not only the resource base, but the project as a whole. And then you've got other projects as well outside of that, as I said. So potential sources from recycling, potential lithium, so potential other things as well, obviously silicon and different products as well. So there's a lot of growth here to be done into the market that's been a bit up and down, but overall it's just, you can't deny the growth. And in fact, EVs, if you look at the hockey stick that's always forecast, we're actually on that hockey stick now. If you look at the sales EVs versus what they were projected to be, they're far and away higher above what was projected. So we're actually, the jury's in. We're on that hockey stick already. And so we've got no doubt about where we're going and what it's going to be worth. Recently, people were a bit surprised to hear about the lithium. We actually mentioned lithium first 6 years ago now when we pegged the ITIC project. We haven't done much with it, frankly, because we've been busy on the graphite. You might say, well, what changed then? Well, there was a historic site there that we knew about and has been known for a long time with a sniff of lithium on it. What changed was late last year, we actually flew over the project. The project actually sits in between Vittangi and it's just south of Vittangi on the way back to Luleå. And we flew over it and saw what looked like large extensions of the pegmatite that we knew about. And we had geologists get into the field this year, just in the last couple of months. And they found lots and lots more material, and then there was a bit more sampling done. Then we went back and looked at the historic results and realized that the whole thing was probably much more prospective than we thought. And so we brought that to light. Now, what was our choice was we could have said nothing about it. You can't really. Once we had some assays, obviously, under a disclosure requirement. So we had to go public at some time. It just happened to be now that the new assays came back. And then, so there it is, at a time when there's very few hard rock lithium sources in Europe. So look, we just think it's a value add. We are going to do a bit more work on it. At the same time, we're already having meetings with groups that may be interested in it that have approached us and so forth. And so there's an opportunity for us to get that brought up either with other parties or by ourselves. But the first thing to do is to assess it more now that we realize that it's a lot. So it's basically big, it's well located. You've got the potential for something of great value there, and it's not a key focus, but it's something we just had to disclose like we do with our other programs as well. So we'll just update you when things come in on that. On the silicon side, continues to, I know everyone says, oh, he's always excited, no details. We don't want to tell you a lot of details until we finalize exactly what the plan's going to be, frankly, but it's going good. The pilot's going excellent. We're learning lots. It's been really good to learn about problems as well as solutions and good things as well. Customers continue to show increased interest. There's continues to be, if you read between the lines carefully around the world, you'll see that the reality for most silicon technologies is they cannot grow at scale. They're not commercial. So there's really fantastic opportunity in this area. And yeah, the things we're learning about are not problems with the product. We've learned about how to successfully engineer up some of the equipment that's working on production. So yeah, it's been a great process. The product itself is really good, and if you look at the potential pricing for silicon anodes, you can sort of see the potential in this business, and that actually it's a fairly small pond. It's not. It's still currently dominated by China, I'd say, but there's 100 startups around the world all talking about silicon. But in a commercial sense, when you actually get the material, calendar it by squeezing it onto the roll, and deform those particles and then see how they work in a commercial setting, there's not that many people that are that advanced at that level, and we certainly are. So all I can do is tell you that we'll get back to you in more detail with that. We want to put together the site, the financing, and the customers, like advance a lot of that before we go to public about it, and also to remain focused on the graphite execution on Vittangi and the anode project in Sweden. At the same time, it behooves us to add value in this area to continue advancing it. The pilot right now, we don't have to do anything else other than the pilot samples with customers and discussions about financing, and how the customers can help with that. Okay, so what's coming up? Groundbreaking, pretty important, pretty amazing to have totally greenfield site for purification and coating of anode. So that's still going to be significant. We should celebrate our wins. To take that from zero and go through the environmental and the permitting system locally to getting that from scratch is fantastic. The debt financing approvals and the finalisation of offtakes are also obviously two big streams, and they continue to be advanced together in light of the appeals progressing on the mine. Okay, so they are all a little bit interlinked in various ways. At the same time, the timelines remain still good, because while we're building some things this way, other things are going to mature at about the same point, so they should all come together. We will be talking to you relatively soon about silicon. I can't say when, so soon, shortly. I know I get hammered with saying things like that, but what else can we say at the moment? And then, of course, we'll continue working on massive expansions of that. On the lithium, we're going to go do some more work first and see whether it jumps out how hard we should go ourselves versus partnering. But certainly, we have the intention is to make as much value as possible for us at the right time. So whether it's now or in future, we'll just look at what sort of partners are available, but also look at what's coming out of the ground. You've obviously seen massive value created out of those sorts of things. Anyway, so I'd better wrap it up now and get to your questions instead of my thoughts and my agenda. Alex, I don't know how you come back from here back in the question zone.
Yes, thank you. Thank you, Mark, for the presentation.
I'll stop sharing so that you can look at my head instead, or what do you want to do?
Yes, please. Thank you very much. So thank you, Mark, for the presentation and updating everyone on the group's activities. So as Mark said, we're now going to move to the Q&A portion of today's session. Thanks to everyone who has submitted a question ahead of time or through the Q&A function on Zoom. So Mark, first question, when can we expect a resolution for the Nunasfara South mining permit?
We've been, obviously things are still progressing through the appeals process. We have been in touch with the court over the last few days, and throughout the process, we don't get prior information from the court. It's totally, we hear at the same time as they would publish something. So we don't get any early indications at all. However, we look forward to their decision quite soon. Something that came up, I guess, through this process recently was back in June, we were given to understand there was a date when they would make a decision. It turns out that they have these regular court dates are more like mentions or presentations where they discuss things. It doesn't mean that they're actually targeting an actual decision to be made public or anything like that by those dates. They're just dates when they are going to meet and the appeals court is going to review all of the things. And it's not just ours. I happen to know that they're looking at appeals processes on other mining applications and expansions in the area. So we're confident that they have advanced things, shall we say, in the last few days, and that we will hear something soon. And as soon as we have something we can tell you, we'll tell you. But we just can't keep putting out, like a monthly release saying, yeah, we gave them a call and we can't say anything. It's just pointless. Right now, legally, all we can say is that we await their decision in their process. We're disappointed too in the pace of it. Well, we're more than disappointed. You can imagine how difficult this is, stuck between, we've got 12,000 shareholders we represent and the public markets and disclosure, but also our financing, offtake, you name it. Everyone's saying, okay, well, when's this thing going to get done? It's out of our control, which it is. And there's a process in Sweden that since they did their private mineral ownership back in, was only 92, a lot of their laws and processes we see from Australia and other countries, it's quite different. They make a decision, but then they check with everyone if everyone wants to appeal or not. And then you can go through another one of those too. You can say, well, if we reject your appeal, you can appeal that rejection. So you can do that several times before things go into force. In the meantime, obviously, we're working with the stakeholders and the people that have lodged the appeals to see if we can come to agreements where they would be happy to withdraw their appeals. There's new regulations that are proposed in Europe that this process all gets shorter. So even from mine, that you basically have to come to a decision within several years instead of 3 to 4 to 5 years. So at the moment, as I said, we are confident with that our application holds up in the face of anyone's appeals, and that all the appeals have already been dealt with in the courts appropriately. However, if the court wants to hear them, they will say, well, we'll set a hearing date and we'll hear them, and then they'll decide then. So they don't really decide now unless they reject all the appeals, which they could do. But in the past, our experience has been with the trial mines that we go through a series of these. So anyway, I think it'll improve, but so we don't know the answer to exactly when they're going to do it. Obviously, if we did know, we would tell you, but we actually can't. We do not get inside information. We can be in touch. We can be told something verbally about, for example, the decision's been made or not, but not what the decision is. It just goes public when it does. So I'm sorry, but I can't do any. We can't do any more than that, and we're choosing not to give you a continuous flow of things that just say we still don't know. It is what it is. We don't even know, even when a date is projected, it doesn't mean on that day something's going to actually happen or not. It could be further delayed. So until we have some concrete information, we just can't go to you. But the process is progressing. You can read the nearly 200-page court decision of the hearing when they granted the environmental permit, and you can see what they already dealt with regarding things environmentally or with stakeholders, and what they said about that, about coexistence with the mine and local stakeholders and our mitigations against concerns from people. And you can see how strong their wording was around saying that the court found that Talga's application stood up to all of that and could be granted, which it was. So now it's just not in force until the appeals are done. But you could say in some ways the heavy lifting was already done. So because the environmental and Natura 2000 permits were actually granted. So here we are in the appeals process, and frustrating though it is, you've finished a lot of heavy lifting, shall we say, and anything else that's required by the courts for us, we'll just continue to respond to as fast as possible, and continue to get to where we want to be, which is the ability to open up on the ground there.
Great, thanks. So next question, why is the EIB debt funding 150 million euros as opposed to the original figure of 300 million euros?
Oh, that's just okay. So when we first started talking to them, that was the upper limit of what they could do, and that's why the wording is always up to. During the process of discussing things with them, and also the range of commercial banks and export credit agencies that we're talking to as a consortium, we then sort of more organised the tranche sizes around what would work best. So that was decided in relation to the broader group and demands that we have. So the EIB, as I said earlier, represents a very, very high standard, and is a key cornerstone of that. But the balance will come from a range of commercial and export credit agencies is what we've built for that. So the total amount of debt targeting is being met as a whole, if that helps.
Great, thanks. Just as a follow-up question regarding the EIB funding, can you speak to just give a bit of color about whether the funding relates solely to the mine or the refinery or the project in general?
Yeah, it's both. It's connected, so it's for the whole project. So the debt piece gets organised, but it's to be drawn down as part of the entire project. So it's the mine and the refinery, which represents somewhat of a challenge then, because if you need some of the money for the refinery, but you don't have access to the debt, well, that's when you're starting to use your equity component. And by equity, I mean that total equity piece and whatever is making that up, because it doesn't mean equity in Talga. It could mean strategics or grant funding, non-recourse loans, things like that within Europe. So you might have to access that prior to the debt becoming available, depending on the exact timing with the mine. But certainly, it's understood that the debt is part of the whole package. Yep. So
Great, thanks.
Yep.
Regarding the previously announced non-binding agreements with ACC and Verkor, can you speak to when/will any other agreements will be announced?
Well, I got to say, all these questions about saying when and having targets, obviously, in the past, not only has been on us, you just can't disclose things that either you're not fully in control of, or that you just can't state until it's actually signed off on. Automotive level qualifications very different to raw material qualifications, and just sending spec products at different times. So it's extremely, and our contracts are automotive supply contracts. They're very, very onerous and big, and they have clauses in there, things like take or pay, things like that. So they take time, and that also was impacted by the European summer holidays somewhat. Lawyers are away at the same time as staff is away from various things. So all I can say is that they still progress, which we always say, I know, and they also are related to other milestones that these companies may have internally. I can tell you that we're very confident about some of those customers, but also other customers that are also getting to an advanced stage of participating in those offtakes as well. So that's, I think, all we can say about that regarding timing at the time. But obviously, if something dies off that we've talked about in that way, then we'll be telling you, and if it gets done, we'll tell you. But right now, they're all interacting in a very, very detailed level. But most things are agreed, as far as I know. They're just there's some small things that are awaiting various meetings to be had and timings to be had at various levels across partners in different ways. But yeah, they're developing.
Great. Let's talk a little bit about Talnode SI. How does the I guess we could say journey to commercialization of Talnode SI compare to that of Talnode C?
Look, it's very similar. You made stuff in a lab, and then now you're making stuff at a pilot scale, and so now you've got the ability to send tens of kilos to hundreds of kilos out to customers. They've tested it already. They've made cells certain size. Now they're making cells this size, or running pilot lines and making big runs of big cells, and they're getting that, they're putting on machines and into vehicles, and they're testing them, and they come back to you to talk about price and timing and things like that. At the same time, you're doing so in the graphite or Talnode C land. We looked at the scoping study, pre-feas and DFS type process because the mines, which are very jorkish, should we say, and there's that process you've got to go through on resource development, proving, and everything to do with the mine, and then you move on the downstream to your off-takers and your finance. In this case with silicon, because we don't, the mine's already, it parallels into the mine and the refinery in having the graphite source, but you've also got the silicon source coming from outside at the moment, and you put those together, and you can choose what site is it. The site is chosen on electricity prices, electricity quality, closeness to customers, chemical supplies, quality of people that work on it. So you decide a site At the same time, your customers are getting to the point where can you enter into offtakes and contracts that can underwrite different financings. Because it's a fairly newish technology product, there's the opportunity to get innovation, grants and funding from green development funds and state aid. So you want to look into those as well. So you're deciding all those. It's a little bit like with Talnode C. You've got to prove it before, almost you have to build a lot of it before you can take it to the market, as it were, with customers. With the silicon, it's a little bit more, the ramp up is a bit more hands off. You don't need quite the same scale. You don't have to invest heavily in it until you are actually ready to go with everything's lined up. So the pathway is similar, but it doesn't need the mining permit side. But you still are going to need a refinery site, whether it's integrating into our Swedish site or it's a separate site. We're determining all the details as well as determining the volumes and the customers. So that's where the feasibility work happens. And over time, what happens is the customers will change their minds too. They might start off saying, well, we want X amount of tons now by this year. And then 6 months later, they say, well, actually, we want this over here, but we also want more over there. So that may change then what you're doing the feasibility on massively. Power prices have shifted around a lot lately, so you have to look at mitigants for that and where that is. So there's a lot to work on beforehand, but the general pathway is the same: samples, testing, customers, finance, all then coming together at the end. You're only going to do it that it's very, very good margins and has very good growth prospects. But it does dovetail so beautifully into the graphite because you're using some of your anode materials are going into it, and it's a growth market, and our customers are the same. So you might have an automotive customer that's interested in the graphite. They will no doubt be interested in having silicon as well, and they don't know where it's going to come from. And they're talking maybe an American company or a Chinese company, and now you have a European company that can supply potentially large volumes at commercial prices, saying we can build this. This is how long it'll take. So it's a pretty strong proposition for an anode and battery materials company to have multiple products, including one as good as Talnode Si.
Relatedly, what do you think about the feasibility of 100% silicon anodes that are often discussed in the media?
I don't see any evidence that way. So I haven't seen anything that really shakes our tree at all. Actually, I like our. I would say that from what I know from the commercialization of silicon organocates, our path to go non-gas, non-silane, our pathway was correct based on what I'm seeing in demand from customers, plus the commercial side, the pricing and the product mix it's not about that. So we make a 50% silicon product, and between 40-50, it's close to 50%, which is very, very high. But it's not designed to be used at 100% use of that. It's designed to then you would blend that into something else, either our anode or someone else's. You can blend it in and take the silicon content down, say 5%, 10%, maybe as high as 20%. Depends on the use. A drone or a hybrid could have a very, very different volume in it compared to a bulk passenger car where they need to warranty something for 10 years or something like that. So shorter lifespan things can get high performance more easily. Premium product, obviously. At the same time, if you add a small amount of our product into your graphite mix, because of the energy density comes up, even though our material might cost you, between 5 and 10 times, should we say, what normal graphite anodes do, the actual amount of boost you get, so on a dollar value per kilowatt hour basis, it's actually cheaper for you. You've actually got more energy density with a lower price, even though the additive you're buying is quite expensive. So it's a bit like a nice sugar in a cake or something. It's only a small amount, but it can have a big effect on taste, as it were. Sorry, I'm pretty bad at metaphors at the moment. It's been a few late nights, but no, 100% silicon is just a nonsense in my mind. And I think if you look very carefully at some of the groups that promote that and talk about it, now that they're actually trying to do more commercial stages, where, again, as I said earlier, about you crush the material like the calendaring density at commercial rates and things like that, those particles will break down, and then you've got to pre-lithiate, or you've got to have super special electrolytes. You've got to have all these other things which are more expensive. There's a really good technical paper just out on the problems of actually commercializing silicon anodes and what are the challenges of it. And that's where we've been for years in developing our product already. I'll try and post that up on Twitter or send a link to it or something. But higher than, like these really high silicon amounts, I think most of those companies are finding out the hard way that it's not actually usable in a commercial sense. But hey, the more silicon anodes, the better. The market is big, and everyone should approach it however they want. But
Great.
Yep.
In your presentation, you referred to the amount of stockpiled ore that we have currently. Relatedly, tying into the Luleå anode refinery, would you just be able to discuss or clarify whether the Luleå refinery will operate the entire year?
Oh, no, it's 24/7. Don't turn the ovens off. So no, the refinery goes year round. So does the mill at the mine site. That goes year round. The only thing you're doing partial time of the year at the moment is the mining. The open pit mining is, we've designed that to just be during half the year. Because it's so small tons, it's only like about 100,000 tons a year. We actually just some of that goes, so the mill's going 24/7 up on the mine, and the mining is just half the year, and we stockpile half of it in these really cool tents, similar to what you see the ore stockpile is in now. So no, and then the refinery goes full time. So it's not like these giant copper mines or whatever, where the mining and the milling all has to be carefully matched. The amount of mining is so tiny, it's so small, that you can store some of it and just feed the mill continuously from that, and feed the anode refinery continuously from that. But the mining can just be kept seasonally, because all you're doing is, instead of mining 50,000 tons each 6 months, you're just mining 100,000 tons in 6 months. That's
great.
That's a couple of days of an iron ore mine. So
looking forward into potential expansion opportunities, do you see any opportunities in North America, especially related to the Inflation Reduction Act?
Interesting. Look, the answer is yes. It's really a question about timing and priorities. So, we're very focused on getting this up. Our customers are in Europe. The demand going forward is high in Europe. The White House has been in discussions with the EU about extending the IRA into Europe, and we're watching that very carefully. Some of our customers sell in North America as well. So we're very, very focused on doing things in Europe, but with an eye on potential expansion. I think that the idea, looking at the demand, you almost everything you make could be consumed in Europe. I think the silicon would be a good candidate, maybe to separately go off to the US. But you also have to keep in mind that the IRA, while it obviously sounds great and is very incentivizing, the more we learn about the details of the funding, the more tricky it is. Some of the debt funding needs paying back from other debt, and so it's not. You haven't seen a lot of, it's not instant cash for whatever the heck you want to do there. So I think we'd look at it carefully. You look at the expense of going to setting up an operation in another country. We'd only do it with the right customer and in the right format and at the right time, and that time's not right now. So we're keeping a close eye on it. I personally feel that the US and the EU are sort of going to get together a bit with Australia, and probably with India as well, as a sort of block, where they're all trying to improve their strategic quality of their supply chains. And so I don't think you're actually missing out on much by not being in America, but certainly we monitor it, and sometimes we'll maybe be there and talking to people, and or talking to customers, or at some point talking to authorities to learn more about it. But it's just not a big focus right now. We don't have to do it, and it doesn't. It would add more stress than it's worth right now. But I think in future, it's definitely growth potential for some of our products in that market to be produced over there versus exporting them from Europe to there.
Great, thanks. Good questions just come through on the Q&A chat. Would you be able to provide any update on our cathode additives qualification?
No, not really. Not without doing a release on it. I like it, like the market, like the product. It's a similar thing. They're taking it, they're mixing it, they're trialing it in products, and when they're ready to do something in public, which is very rarely at an automotive type level, that's the problem. This isn't the raw materials buyers. This is like the equivalent of people buying little transistors to put into iPads. I mean, they're not going to tell you who they're buying it from. So it's very, very difficult to go public. But I can tell you that it continues to be of interest. Our ore body has got spectacularly natural products that suit ultrafine additives to compete with carbon black and other additives like carbon nanotubes. They're currently being used. I remember visiting, no, I can't say that. I remember visiting someone in Asia probably 4 years ago now, and they, one of these additives that I just mentioned, they were making themselves. And I was like, well, that must be really cheap. And they're like, no, that division has to sell like at a transfer price that's like market prices. It's still super high price compared to what we can do it for. And it's because of our natural, or our ore body, the way it does it, and our process technology. And that's what we're going for, is saying, well, instead of doing that, buy our stuff. But I was shocked at just the volumes that they're already using in battery materials and cathode additives. So yeah, it's really, really interesting. We don't have to displace much carbon black or many carbon nanotubes to have thousands and thousands of tons of material, which for us is quite cheap to make. It's been graphitized in the earth, super tiny particles. Once you liberate them, you don't have to grind them down or do much to them. They're almost non-compliant anode spec materials, almost waste products that you can then use in that market. So no, it's exciting. There's a whole range of things in that area, both coated and uncoated type products, like our Telfite itself being reused as a high performance additive. So yeah, it depends on the customer spec, but it's coming along.
Great.
And I'd love to do once we have a customer, I think we can go public with and release some results, like test results, and show volumetrically or pricing something about it, so you can get more transparency on it. But until then, we just can't. I'm sorry.
That's okay. Look, we're almost at the end of our session, so we just have time for one last question. Why do graphite anode industry analysts' assessments sometimes differ quite strongly from each other, in your opinion?
Okay, so just to rephrase, so anode, how come when people are looking at anode pricing, it's all over the shop? Some companies are saying one number, analysts or research groups are using another number, and there's big, big differences, right? Okay, so first of all, there's a lot of different types of battery. So you have little batteries, could be in a watch, could be bigger in a phone, could be something in an EV, and a BYD being sold in China. A BYD vehicle is a different price point potentially in its anode materials than a Tesla or a Mercedes or a Maserati or a Fiat for that example, a nice Fiat Uno. So the specs are radically different in the energy density and how long it lasts for and what temperature range they want it to work for, and its charging performance and how it works in with the particular cathode technology that they're using, the exact chemistry that they're using for that product. So you actually design a cell. So batteries actually aren't yet commodified for those sorts of applications. They are a bit commodified for widgets and in torches and things like that, low-end stuff. But for warrantable performance, the performance range is very, very different. So you could have a really low-quality synthetic being sold very cheaply versus a really high-quality natural, which allows a hybrid EV, some sort of hybrid battery to work with super fast regenerative braking technology, extending the range of a hybrid car, and that could be double the price. So the problem is you don't have transparency on someone's exact anode performance and how it is. So if you've got if you're just supplying bulk raw materials to someone or bulk SPG to someone, they're like, well, it's going to go to someone else that's going to work out how to code it, what technology they're going to use to code it, what sort of applications it's going to go into, what customers, and they'll have different suppliers for different things. With Talga, our pricing is based on our specific performance and volumes and the blends that they use to get the performance that they want directly to the cell makers and the autos. So that's why everyone's scrabbling around. But it's no different to the early days of lithium. You didn't know what lithium carbon hydroxide prices were until years into the earliest lithium booms, where they started getting stuff going, and then you have spot prices develop. But they're all raw materials. You today would struggle to find a lithium electrolyte price, for example, or a separator price, because it'll depend on performance. Cathode pricing, it's all generic. You don't know exactly what someone's selling a nice, fast charge, long performance life cathode is selling for. So it's the same with anode, unfortunately. So everyone's doing their best. You can get some pricing from fast markets, from Benchmark. There's a couple of Chinese groups. Some of the groups will publish low, medium, and high performance. Others don't, but you just don't know exactly where the product of the company that you're looking at, what they're selling. So unfortunately, there's a massive range anyway of low quality products are cheap, high quality products are not cheap. And then you add in the prices you're seeing are based in China, FOB China, they're not landed in Europe. Then you haven't allowed for premium pricing, strategic pricing. You haven't allowed for saving 30 days of shipping time that someone's got a shorter supply chain. So people are willing to maybe allow for different price points by the time they use the product versus what you're seeing in these very rough market reports. So it's better than it was a couple of years ago. You didn't even have that, I guess, public, but now you've got some anode things and synthetic prices and stuff being made public. So it's better, and it'll continue to get better, but ultimately you won't know because you enter into direct contracts with your customers, and those things will rarely get published if you can help it.
Great. All right. Well, that's all we have time for today. So thank you, Mark, for your presentation and time answering questions. I encourage everyone to keep an eye out for our next investor webinar, and thank you everyone for attending.
Thanks everyone. Cheers.